Good afternoon. How are you all doing? Checking my mic's working. Seemed to be a bit intermittent there. How is everybody? Afternoon, Yusef. It's Tuesday. Very confusing this week, having Monday off. Got completely confused. So yeah, it's Tuesday. It's not Monday. So we'll be doing news today, which we normally do on Monday because it's Tuesday. We normally do it in the morning, but now it's afternoon. Very confusing week. How are you all doing? Pot DJ, Peter, Mayor, morning, afternoon, wherever you are. Right, so we'll kick off with the news in a sec. It's 1:15. We've got 15 minutes until the market open. We'll have a quick look at the DAX and FTSE from this morning. A bit lackluster this morning. The FTSE was a clean break. Where's my pen gone? FTSE was a clean break to the upside this morning. So a nice, easy opening range breakout and pre-market range breakout, depending which one you took, straight up. My target was 3R. Unfortunately, it came back down after missing target, and I got out with a 1R profit on it, so not bad. DAX in a hedge, very choppy open for the first sort of 40 minutes or so. Then it tried to break long, failed. We've had another crack at going long, which is pulling back. So very weak upward structure on the DAX. So target on the DAX I've got set at the moment just shy of ADR and just shy of these double monthly highs. So we've got the high there, which was the high of last month, and also the high of the previous month. Yeah, so that's a 2-month high. So we're coming back up into what's that drawn like that? Weird. We're coming back up into this sort of last month's high, previous month's high scenario. We've then got at 150 to 175 ADR, the previous month's high. So we're coming up to a very strong resistance area here. This is a absolutely parabolic move for the last sort of 3.5 weeks. There's a lot of parabolic moves going on at the moment. Market's really wanting to do something, but it's just undoing all the crap and the loss that it's had. So we are approaching a very good resistance level on that. So my targets are just below that high. I'm expecting a little bit of reaction there, but I think it'll probably get through it at some point. So that's the DAX from this morning. So hedged on that one. So about $100 down on the morning at the moment, but it depends what the hedge does. Why are they not in the right place? So we'll see how the New York session goes. Obviously, we had Powell speaking on Friday afternoon. Powell decided to tank the US dollar with his we're going to be reducing interest rates speech, which is miles away. Anyway, since then, we've had quite a few Fed members coming out. Holzman there saying that's not from the Fed, he's from the ECB, but Holzman there saying that they would reduce their rates again if the Fed do. We've had various Fed members coming out and saying they are happy to reduce rates. So it's not a case of, there's Daly again saying the same thing today. It's not a case of when, or if rather, it's a case of when, which is going to be September, and it's a case of how much, either 1/4% or 0.5%. So we've got a Fed rate cut coming, but if you look at the US dollar, Euro US is probably the best thing to look at. We've been kind of factoring this in for a little bit now. For the last sort of month or so, we've been selling off the US dollar. So I think this sell-off is in anticipation of this move that we got on Friday. I'm not sure it's going to scream to the upside, the US dollar, or rather to the downside, and everything's going to scream up against it, because we've factored a lot of this in. We knew there was a rate cut coming. It was highly likely to be September. We've now had confirmation of what we were expecting. So the market's already kind of made the move. So I suspect we will just continue market structure against the US dollar. But obviously the euro is also going to be dropping its interest rate, as it has confirmed. And if the US drops their interest rate, it will drop its interest rate faster. So with the euro becoming bearish against the US dollar becoming bearish, there's a good chance that we will possibly just see wide range bound action. And very much the same with the pound. However, Bailey has indicated that we're not quite ready to drop our interest rates again yet. So we've got a parabolic move again into the US dollar, or rather out of the US dollar. But there's much more potential for that to push, I think, than the euro. So it's difficult to call at the moment until we get that first rate cut coming in. But yeah, big strong moves against the US. So that was the kind of news from the last couple of days. 5.3, yeah, there's no more change today. Nvidia has become the world's most important stock, adding pressure to upcoming earnings report. So if we look at basically the upcoming news this week, 3 o'clock this afternoon, we've got the first US news. So yesterday was a bank holiday in the UK, which is why I wasn't here. We had no news yesterday. We didn't get an awful lot of movement yesterday. It was very range bound all day yesterday. Today, we've got no news either. We've got consumer confidence coming out at 3 o'clock. Whether the market moves on that, we'll have to wait and see, but it could well do. So the first proper news we've got this week is the inflation figure for the Australian dollar tomorrow morning, which is forecast to drop spectacularly, meaning that if that happens, they may come out and say, we are going to start to drop our rates. However, if that comes out at 3.8 and is stubbornly not moving, they've said and also indicated a couple of times now that they will put the interest rates up again. So the Australian dollar was sitting at 4.35. We had a bounce on inflation up to 3.8 last time. Now we're getting a drop. If we get a bounce this time, or we don't drop below that 3.8, it's going to put pressure on them to increase that again. Obviously, unemployment is also going up, which is another indication that they need to start dropping this. So Aussie is very hard to read at the moment, but at the moment it's still bullish. So that'll be an interesting figure to look at tomorrow. GDP for the US dollar and the unemployment claims figures tomorrow on Thursday afternoon, along with the CPI figure for Germany. And then we've got the CPI estimates and GDP for the CAD, for the euro and the CAD on Friday, and obviously PCE. So this week is very light on news. So all the news we've got coming out this week is important in the fact that it is inflationary based, but it's a flash estimate on the yearly. It's the preliminary CPI for a portion of the euro, and it's the annual for the odd. So although they're red news, they're not the most impactful in the world. And obviously unemployment claims is the usual. That's going to have no bearing whatsoever on what happens with interest rates now. They're not, it's happening. So whether that goes up or down, interest rates are changing. PCE might have a bit more impact, but it's a very, very weak news week this week. So if we look at the next change, is going to be mid-September, or is it end of September? So we got ECB press conference and the euro rate coming up there. FOMC is there, isn't it? So it's the 18th of September, so roughly 3 weeks. It's interesting that the euro is going to change their rates before the Fed. So I think Lagarde will be having a few words with Powell before that happens, just to firm up what they're going to do in September. Morning, everybody else. Haven't said hello to you. Fletch, was Zizek, Mark, AZ, Callum, George. How we doing? So there's your news for this week. So yeah, not very important really this week. It's sort of is, but not massively. We might get some big deviations, which will obviously move it. But the market basically now is trying to figure out what on earth we do with this US dollar. So obviously that's Powell's speech impact, which gave us a fairly decent ADR day. That was it. But, it's nothing we weren't expecting, really, is it? It's just a confirmation. So I don't necessarily think it's going to be one of those we're going to scream away I think we're just now, as with everybody else, euros dropping rates, pounds dropping rates, Canadians dropping rates. The Swiss went early. New Zealand have gone without telling us, and now the US. We weren't not expecting this to happen. So it's just a case of who's going to be the stronger, really, moving forward. So as you can see, there's no ADRs today. Nothing exciting whatsoever. Why is that showing a 0? Weird. So yeah, nothing on ADRs today at all. Nothing weekly. Wouldn't expect it to. It's only Tuesday. So we've got nothing really to look at from a strength perspective today. You can see yesterday, Aussie US there, completely sideways. CAD Swiss didn't go anywhere. Aussie New Zealand didn't go anywhere. Pound New Zealand, just nothing really moved yesterday. It's all kind of bank holiday in one of the major financial districts and recovering from Powell. So today, really, we are kind of similar ranges to yesterday with most stuff. US dollar CAD not really gone anywhere. So yeah, it's all a bit waiting. We're kind of waiting for something to happen. And as I said, unlikely it's going to be the consumer confidence numbers that is going to do it. But there's no real big news this week until unemployment. So it's going to be a tricky week, I think. Right. 26. So there's your ADRs. Those are your weeklies. Nothing exciting there. Your RSIs. Sorry, brain went blank there. RSIs, we've got the US dollar CAD massively extended on the 4 hour, which I'm on at the moment. So this is 1, 2, 3. Obviously, that's the biggest week. And we've started to drop this week. So we're on week 4 dropping on the US dollar. This is what I mean about what I'm saying about this was not a surprise on Friday. Yeah. We've been selling into this for 3 weeks now. Market getting ready for Powell to announce it was happening. It happened. Brilliant. Right. So we know that's going to happen. So we've already factored that in. So there's absolutely no problem them doing that move now because they are massively short already. Therefore, they're ready to get a bit of that profit back in the bank before the interest rate comes. And that's 3 weeks away. So if you look at this 4-week drop and anticipate maybe a week or two's worth of pullback before we drop those interest rates, totally on the cards, isn't it? So I wouldn't read too much into Friday, but we'll wait and see what the market makes of it this week. What do you think about Libya's news when the cut to oil production? Yeah, so we had big moves on the CAD yesterday. So Canadian dollar yesterday strengthened up a lot. So whenever there's any disruption to oil prices from the Middle East, like there was with when the Russian invasion started in Ukraine, as soon as there's oil supply disruption, the contingency plans kind of kick in for, right, we can't get oil from there. Where are we going to get it from? 2 other biggest exporters, Canadian and US. So what tends to happen is you tend to get a rally in the Canadian and US prices when there's disruption to oil. And oil price usually drops, pumps up. So yeah, I don't know what impact it's going to have long term. It all depends what happens. Reducing production or cutting production for a short period of time creates a little bottleneck. But don't forget, every week we look at the barrel counts. Yeah, so oil inventories come out at 3:30 every Wednesday. This is how many millions of barrels we've got in surplus. Yeah, so it's not as if we're going to run out, but it's not healthy for disruption, obviously. And this is the problem with oil and why it's a difficult thing to trade, because it's heavily manipulated. Yeah, all these countries that produce oil, we've got OPEC, which basically is the kind of regulatory body, if you like, the gang, the cartel. Type thing, and any of them at any point can just pump the price or dump the price, depending on whether they put out more oil or supply less of it. It's a supply and demand driven product. So Don't know what's going to happen with that. I don't trade oil for that very reason. It's very unpredictable. I've tried multiple times and it just bites me in the backside, so I don't trade it. Markets open. So pre-market range break in play on the S&P and the Dow. The Dow pre-market is that first 5-minute candle we just had closed, and no trades so far on the Nasdaq. So obviously all the indices yesterday. The Nasdaq didn't actually. So the Dow made new highs yesterday, all time. Not sort of all time, but I don't know if they are all time actually. I don't think they are all time, are they? No. Oh yeah, it was. It's a double top, really, wasn't it? So Dow yesterday obviously moved out into new highs from last week. So we hit that previous monthly level and reacted. So market trying to push higher and get breakouts on all the US indices, but got kind of stopped in its tracks a little bit yesterday. So didn't quite crack Friday's high there on the Nasdaq. S&P we did. So be interesting to see where we go today. If we do get a run at those highs and it breaks them, we're off, which will indicate more US dollar weakness. So we'll see where we go. But long on Nasdaq and S&P at the minute. And have a look at US dollar Swiss. Yep. Look at the RSIs in a sec, and US dollar Swiss. Obviously, that's come down because of US dollar weakness, which we've been selling into for weeks now. We've also had that strong Swiss franc off the back of what's going on in the Middle East. So there's a lot of money going into safe havens at the moment, this being one of them. So this is kind of, if that US dollar interest rate drop happens and the market preempts it in a negative way and wants to sell more of it before it happens, and it kicks off more in the Middle East, this is the one that's going to drop the fastest. Yeah. So from a short perspective, everything is kind of lining up for that. But obviously that is based on a lot of ifs and buts. But if you look at, we've been selling off since April. But it's, the US, don't forget the Swiss franc are also reducing interest rates as well. So it's kind of a bear against a bear from that perspective, but it's a bear against a bull from a what goes on in the Middle East type scenario at the minute. So why is a stop loss? Why is there a stop loss on that? Weird. Bit of a glitch there. I had a stop loss in place. So no breaks at the minute. There is a break obviously high on both of those, but there's no momentum out of the pre-market ranges at the minute. We're stuck. A lot of volume, a lot of volatility, but no direction. Long Nasdaq. So long all three today. Just quickly see how the DAX is doing. So DAX is trying to go high as well. Again, DAX made new highs yesterday. So we're approaching that level, and obviously these highs. So we're not all-time highs, but we have completely undone that huge collapsing move. That's what I mean about all these parabolic moves at the moment that are going on. This market is very different to what it was last year. All markets are very different to what they were last year. Getting a lot of squeezy movement. Okay, so just long all three at the moment. That 5-minute opening range candle is about to close. So basically indecision across all three indices. So there's no momentum in either direction. So NASDAQ, we're playing around at yesterday's low at the moment. If that breaks, obviously, good chance we're going to flush today. Yesterday's low is holding on the Dow, and we are in the same spot as well on the S&P, right at yesterday's low. So this is a key level to see if they're going to hold where we sort of finished off on Friday. Not a lot of volume. We got no big news this week either. So, afternoon, Champagne, Mumo. Howdy. Okay, looking a little bit more bullish now. So, nice big wick to the downside on all three indices on that first 5 minutes worth price action. We're putting in another wick now on all indices as well. So it does look like there is a bias long, but we'll see if they've got enough legs to carry it today. We'll come back to that in a minute. Right, so RSIs. So just going to quickly cover the ones which are really extended, and then I'm going to have a look through all the pairs anyway, because it's Monday today, and I should be doing analysis of all the pairs. But it's not. It's Tuesday, because I wasn't here yesterday. So there you go. So US dollar CAD we've already covered. That's massively extended. So we've got a big extension to the downside on that. Parabolic embedded on that 4 hour, really extended. If you look at where we are on that 4 hour right now, or where we hit basically on Friday, we've only been there a few times in the past. There's one behind my head, which is there. There's one here, which is there. There's one here, which is there. And there's one here, which is actually there. And then it collapsed again for about another week, then did the retracement. So obviously very, very due a pullback on this. So the market very extended and one-sided short at the moment on US dollar CAD. That oil news didn't really help that we had yesterday. So yeah, it's either going to come and test this propulsion area and this low, which is about 225 ADR. So it's going to drop for another week, a la that sort of move. Or we are at the extension now and we're going to get a week's worth of pullback. So remember what I said earlier about why it's important to look at when things are happening. September the 18th is the next interest rate drop on the US dollar, or the first interest rate drop on the US dollar. They've been selling into that for the last few weeks. So they're going to want to get some of that off the table, ready for probably piling into the next short onto the US dollar. But obviously we've got to see what happens with the Canadian in the meantime. So massive extension there, very, very big extension. We hit the 10 level. Very rare we hit that. And obviously, as you saw from the last year's worth of price action, when we get down to that level, that much stretching in the market, they have to pull back. There's not going to be too many more people that are willing to buy at this level. Yeah. Dumb money, the dumb money, if you like, obviously goes, oh, it can't drop anymore. It can't drop anymore. It can't drop anymore. Yeah, it can drop more. But the dumb money eventually run out. Yeah. When you run out of dumb money that's willing to buy yourselves, you have no choice. You have to go back the other way. You turn into a buy. And then obviously the cycle repeats. So we're at a very good level there on extension on 4 hour. We've got an hourly extension on Aussie New Zealand as well on the hourly charts. So this one's been dropping hard for the last sort of week and a half. We're coming back down into a very interesting level down here. So we're basically down below that 20 to 30 level. Again, much rather wait for it to get down below the 20 and above the 80 at the moment. Really big, strong moves, especially on this one. Don't forget, we've got that CPI number coming out. If that CPI drops dramatically on the Aussie tomorrow, that's going to weaken that Aussie, because they've said that they're going to increase the interest rates. If CPI is sticky, they're forecasting it to come down. If they get what they're forecasting, it's going to release a load of pressure. unemployment's going up in Australia. They want to get the interest rate down as fast as they can. So key number coming out tomorrow morning on that one. Euro Swiss first ADR of the day. So that one's a nice extension to the downside, ready for long. Euro Swiss. So this is Euro coming down, or is this Swiss going up? Bit of a combination of the two. So a little bit of weakness coming in on the Euro, the Swiss franc powering up as well. So this is more Swiss franc strength than Euro weakness. There we go. So strength in the Swissy. So Euro Swiss is an ADR extension to the downside. There's the first one today. Again, this one bias is more bearish than bullish. Lagarde confirming that they're going to drop interest rates, thinking they want to pause this month, this coming month. However, if the US drop their interest rates, it will encourage them to drop faster, try and stay ahead of the US. Swiss franc, obviously, at the moment, strong because we're worried about what's going on in the Middle East. So bias should be fundamentally short on it. So if you're taking ADRs against the fundamental bias and against the trend, obviously, don't get greedy. Sort of look for close propulsion gaps, quarter to a third of an ADR pullbacks, that sort of thing. So you can drop down M5 on this one, look for an entry. Not going to get a reversal on this until there, which is 94,350 roughly. So that'd be your entry, and then obviously you could get a second leg in. That's kind of where we opened. So I'll be watching that propulsion gap on M15 for a potential target, but wait for some strength to come in because it's at the moment collapsing. Don't want to get in front of that one. So that's your first ADR of the day. Let's have a quick look at where the indices are. Hedged on the S&P and the NAS. This is kind of confirming what I was thinking. I said about this last week. I think I'm going to start scrapping the S&P. It's very rare, or it's becoming more rare, that these guys don't do the same thing. They were a little bit more out of sync beforehand, but they are really in sync now. They kind of go through periods, the S&P and the NASDAQ, where they are very confluent and they do the same thing at the same time. Then they go through periods, usually around earnings, where we get a bit of divergence. They're back together again. It doesn't make sense to trade these two. It's great if they both break cleanly because you get 2 times the profit. However, if they get hedged like this, which, you know, often you do, you're taking double the loss, or rather double the hedge. So double the pain in the backside to deal with. Whereas you got things like the Dow taking off. Whereas if that goes up now and goes straight to TP, that would have paid for the hedge and it's a profitable day. Now it's got to pay for 2 hedges. So I think I might start to withdraw from the S&P and not trade it. Or I'll tell you what I could do. But then it doesn't make any sense, does it, to just trade it? I was going to say trade it with smaller risk just so I can show it in here. But whatever you do on that, you're probably going to find you're going to do on that anyway. But anyway. So Dow, clean break upside. So the Dow is trying to rally up to yesterday's high. The NASDAQ has broken yesterday's low. And so has the S&P, although there seems to be a bit of buying coming in now. So if the NASDAQ's going to sustain this break, we've got a tiny little low there, but that really is your first resistance, or rather support to the downside, this propulsion move, which is 125 ADR. So my target is ADR, which I will leave on and see if I can get a pullback out of ADR today. But if it breaks to the upside, just shy of ADR to the upside is where you're going to find sort of that Globex support that broke on Friday. So that'd be a good target to the upside. But we'll see where that one goes today. Just annoying getting hedged on that one. Afternoon, Segar, JC, Pound CAD, I'm flipping about a little bit. Nice monthly high reversal last week. So there's your reversal alert on the 4 hour straight off of that high. That, to be honest, though, that move there is partly to do with the oil issue at the moment. So, or rather, that part of it is. So whereas it would have probably stayed as an inside bar on Friday because obviously markets were shut here yesterday, we broke down on Canadian strength on the oil side of things. So it is a reversal alert though. So yeah, looking good for a pullback on that leg there. And it's double top. So if we're going to form a new range, you want to be watching these lows, or rather that accumulation there, which is about 225 ADR. Watch that high from the previous month. We tested that level roughly there a couple of times, tried to buy it up, weren't successful, came and accumulated around it. So this is definitely a point of interest, this area. So that would be a target to the downside. Also, obviously, a 50% retracement. If you're in this for from previous extensions, you may be in it from sort of a couple of weeks ago when we flagged, or from there where we just flagged. Obviously, you'd be looking to get out. Yeah, same thing, somewhere sort of halfway down. Okay, Dow approaching Globex high, or rather on its way to Globex high, which is here. So let's see if we get some resistance at that level. Right, let's whiz through all the pairs. GU, I'll get to GU in a sec. Waiting for pound CAD to drop. You're in it, yeah. So yeah, I mean, we're holding off. We got 10 minutes until the consumer confidence news comes out. So there is a chance that we may get some movement off of that this afternoon. I mean, from a US dollar perspective, and obviously US dollar will drag the Canadian with it. So we'll see what happens with that. It may well get a bit of a kick this afternoon. So I'm going to run through the yens all in one go in reverse order as usual, because I'm still not interested in the yen. So since the intervention, we've obviously dropped dramatically. So the US dollar has weakened. The yen intervened. It kind of became the perfect storm around here. So we had the intervention move, then we had the second intervention, and then the following week we started selling off the US dollar. So absolute perfect storm. This is the largest move we've had, period. So it's the largest single monthly drop we've had on it, basically ever. So, you know, this is completely parabolic, and it's off the back of the Japanese pumping, don't know how many hundreds of trillions of yen into its currency to obviously drive that move. So where the market goes from here, anybody's guess. Analysts don't know. I don't think the Japanese know. But obviously the US are interested in keeping the rate as high as possible, but they're going to struggle obviously with potentially a weak US dollar coming up. So I would be looking potentially for a range to form somewhere. So this low, we seem to be kind of reacting at the moment around that high, which is where the intervention move finally petered out. We got that little bounce. We're testing that at the moment as a potential double bottom. And if it fails, we're looking at last week's low, and then obviously we're coming down to these levels. So it's very difficult to pick a bottom on it. You never can pick a bottom. And fundamentally, directional bias could be either way. So the yen at the moment obviously is bear, but you have to say this thing's exhausted. You're going to find it difficult to find people that want to buy this at the moment. This is a carry trade used by banks and institutions to generate revenue. They can't do that anymore. So what they start to do with it now is difficult to answer. So all the yen pairs, obviously, at the moment, are in the middle of a pullback. Where it's going to pull back to, who knows? The yen's gone very neutral over the last 2 weeks. So what you're going to find is whatever happens to the cross currency is more likely what's going to drive the direction of this. So it's going to be more weighted in line with the New Zealand dollar. If it rallies, that will go up. If the US dollar drops, the US dollar yen will go down. So the yen pairs could easily move in either direction, depending on what the cross is doing. So very hard to pick a direction on any of these at the moment. The markets are very confused, full stop, at the minute, because we keep getting mucked about with interest rates and they don't know which way it's going from month to month at the moment. So movement is very parabolic or very dead. That's what we're finding. We have been finding for the last year, really, haven't we? So that could go either way. Euro is bearish at the moment, and it should continue to be. We've got another interest rate drop on the cards. The Swiss keep dropping the interest rates. However, with what's going on in the Middle East, could easily hold up very well. So all of these very, very confusing to read at the moment. As you can see, for the last 2 weeks, the market's done nothing. We've had the parabolic move off the back of the intervention. We've had the weakness in the US and continued strength in that yen. Petered out. Now where? Don't know. But this is a roughly 38% retracement on that leg. So if they're going to continue on it, you could get into some shorts here. But it could go anywhere. So yeah, not really playing with the yen at the moment. Swiss franc, very much the same. So the Swissy rallied with the yen. So again, safe haven currency, yen and the Swiss. So when you have troubled times, the Swiss franc powers up. When they pull money out of certain currencies and put them into other ones, the yen and the Swiss tend to move together. So we had that big move on the Swiss franc as well. So again, same thing with this one. You've got to say this is going to be more bearish. There's so much uncertainty going on in the world at the moment with conflict. The safest place to put it is somebody that's not interested in any kind of NATO agreements or anything else. It's all about finance. It's all about currency. And if you want your money somewhere safe with a low interest rate that's not going to fluctuate very much, that's where it goes. So if you're worried about any other currency, you pull it out and you put it there. And that's exactly what is happening. So you got to say fundamentally it's a short on the Swiss. But when this thing goes, it doesn't stop quite often. And you can never tell when it's going to go. Jordan has also come out now and said that they're going to intervene. So they're happy to intervene in either direction. If they deem the Swiss to be too strong, they'll sell a load and it will pop. So it's a very erratic currency to be trading at the moment, along with the yen. So these pairs are ideal for stop loss based strategies where you can get in, stick a standard risk in the market, hold it and just hope you're right. And if you had any sense, you'd be going that way. But when timing wise, if you got in on a pullback on that at resistance, you're still in it. Yeah, it's sat around for over a week now. I got my last short on that. Remember, I took that short at that resistance and got out down here because I was worried about a pullback off of that, which it gave us. You can't time these things at the minute. So same with the Swissy, New Zealand Swiss. We're stuck in a 2-week range at the moment, and US dollar Swiss, obviously. You can say this is what I mean by these Swiss and these yen pairs. Whatever currency you're trading against it is going to be able to move it until they decide to power up or weaken. So you can see how weak that US dollar's been. Coming down further at the moment with that Swiss franc strength we've got coming in to a beautiful double bottom bounce potential. So you've got a week and a half worth of drop there, nicely extended to the downside. Hourly RSI is on its way, but that's been reset by obviously this sideways move. So good looking support bounce coming up on that one. Just quickly go and have a look at what's going on here. Total chop at the open. Really messy open today, really messy. Right, so the Aussie dollar CAD, obviously, at the moment, the Australian dollar is the only bull currency we have left. So with the fundamentals, obviously, painting the story, 4.35 is where we've been sitting for absolutely ages. They haven't dropped their interest rates yet. Their inflation bounced, stopping them doing so. Canadians have dropped, pounds dropped, the Swiss has dropped multiple times, the euros dropped, the yen we don't worry about. New Zealand dropped unexpectedly, and US are dropping in 3 weeks' time. So these guys are the only ones which at the moment have got interest rates stable or possibly going up. So the currency is going to be stronger against everybody when they do their interest rate drops. So all of these will be easier to get out of bull than bet trades, but equally you should be able to take it in either direction. As you can see, I had a short on there, so you should be able to trade it in either direction really, but it's not really giving many signals at the minute. It's very flip-floppy, so nothing really to see on that one at the moment. Obviously the move down we had yesterday was Canadian strength. The New Zealand dollar, we're again pushing down quite hard on this one, which is interesting because the New Zealanders just dropped their interest rates unexpectedly. So this is the interest rate drop on the New Zealand dollar. Quite rightly, it did that. And now it's completely undone it. Not just undone it, more than undone it. Again, absolutely no reason for it. But we've seen this every single time they change the interest rates, like 10th of July last time they did it. Every time they change the interest rates or don't change the interest rates on the New Zealand dollar, it goes mad. So very, very weird price action on this one. Again, shouldn't be a problem trading it in either direction. However, if they decide to increase their interest rates and the New Zealanders drop again, this thing's not going to stop. So I've been caught in some parabolic moves on this in the past, like that one there. You can see it is very erratic. It will go parabolic for a long time if it wants to, and usually it's to do with interest rate differentials, and we're at the point where we're changing all interest rates. So we'll see what happens with that one. But there's no signals on that. Oh, there is a signal. Sorry, there's a potential long forming at the moment on the hourly, but you've had, depending on if you're trading 30 or 20 levels, you may well already be long in it, scaling in at the moment. But you've got nice support coming up within ADR and 125 ADR, so that's your 3-week low. So you've got two good support levels if we're going to be forming a range. There's no upside targets really on this one though at the moment, apart from the interest rate there. So Aussie US obviously pumping ahead of the potential interest rate drop. I say potential because still haven't confirmed it. Well, they have. They've said it, but they've said lots of things in the past and not done it. So last Friday, a beautiful double top on last month, immediately dropped away yesterday, and we're holding. But that is a propulsion move into resistance. So if you keep saying the same thing over and over again, I'm not going to do it. Spamming in the chat is not going to get me further down the list. It's there. You can't see it, it's off my screen. I will get to Euro Swiss. So let me just block this guy. So I'm not in the mood for idiots today. Remove. Bye-bye. So yeah, we'll see what happens with this one up at resistance. So hopefully we should see a little bit of strength coming through on this US dollar. It's very difficult to call because obviously we've been selling into it before they announced the interest rate drop. So I'm hoping that this is market speculation ready for the interest rate drop, which it should be, which is normal. For 3 to 4 weeks before we get some news, the market tends to react. So hopefully we'll be coming back down into this area here. So Aussie dollar is obviously bullish. US dollar is bearish at the moment. However, we haven't got that bearish confirmation yet, i.e. they haven't dropped the interest rate. So everything you're trading against the US dollar at the moment is a speculative potential move, which is all going to unwind. How far it unwinds and how fast it unwinds, we'll have to wait and see. This move here that Powell caused could be a continuation. Yeah, so they are holding this propulsion gap. If you look at all the US dollar pairs, the propulsion gap from Friday is holding, but that's not surprising because yesterday was a dead day. So that doesn't mean they're buying this up. It just means there wasn't much trading yesterday. So this morning they bought it up again, but we didn't get very far. Yeah, so it's all a bit quiet on the US at the moment. We've got very little news. Morning, Blue Trader from Pontevedra. It's sunny. Like the short in the Euro Swiss. Yes, lots of people want to talk about the Euro Swiss. We will get to it. Don't worry. CAD Swiss this time. In fact, I've covered Euro Swiss already. Anyway, I've already covered the Euro Swiss. I'm not going to cover it again. It's coming down. Did it when I did the Swiss franc pairs. So CAD Swiss, nothing you can do with that. Totally sideways. This propulsion move here is off the back of this propulsion move here. They're buying this level. That's all I can say. Whether they'll continue to, we don't know. So down to the Swiss franc, basically, we got good strength coming into the Swissy at the moment. You had a signal to go long back here. I mean, if you're in this for 5 days and you haven't gone anywhere, my inclination is always to get out because obviously RSI is reset. There isn't a signal anymore. They're certainly not doing what you thought they were going to do. So nothing really to see on that one at the moment. Euro odd, again, very, very, very sideways. We are stuck here. We're down at this area, which we ground up into, sat around. We had that crazy 300 ADR day a couple of weeks ago on the Monday, 2 weeks ago. We pulled all that back, undone it, and we're sitting again down here. So this is kind of a price discovery failure. So where it goes from here, nobody knows, but it should be bearish because obviously we've got interest rate drops and no interest rate drops. So it should be a bear move from here. So if you're a breakout trader looking for a break of that low and then you're dropping back down into this area, miles down here, because there's literally nothing but clear air there. There's no real good support resistance or market structure in this. It's just a grind. So there's nothing really to stop this coming back down again. So we'll see what happens with the interest rates on the euro, which is in 2 weeks-ish. But hopefully Lagarde will give us a bit more confirmation before we get there. Euro CAD, again, pushing down. Good looking long opportunity for a push back up on this one. 4 hour just got extended, not quite down to that 20 level, but getting there. So big strong move to the downside back into where we bought it from last time. So that last short I got out of in that propulsion. A push up into ADR would be a nice little short. But obviously the Canadian dollar interest rates are dropping and the US dropping will drop the CAD as well. Whether the euro can be more bullish than the US and the CAD, we'll have to wait and see. But yeah, no real signals on that in a minute. It's getting close though to a downside signal. Euro Swiss, we've already covered. It's bearish. You want to be selling it. Euro pound. So got a long on this one. Got 2 positions on this at the moment. It's still pushing down. Didn't quite get a third on today. So we're sitting down here. This parabolic move came out of absolutely nowhere for no reason. So shorted that, expecting a kind of accumulation or a flag break. No reason for that. So there's no reason why it wouldn't continue. But it's pulled all the way back to do an A-shaped recovery. So at the moment, there is propulsion gaps, as you can see, to the upside galore on the 4 hour chart. If you look at the hourly, there's loads as well. So we've got lots of big propulsion moves to the downside here. You've got a big propulsion move there, although that is really the main propulsion move that re-broke that low and retested that low. So I'd be looking for somewhere either that level there or back up into that propulsion gap, which is over 225 ADR to the upside. There is no bias either way on this. Both dropping interest rates. The pound is going to be more cautious, I think. So I think there's more chance of it being more bullish than bearish. But obviously, you can see for the last 2 weeks that's not the case. So it's a difficult one. I don't have a problem trading this in either direction. That move there was just out of nowhere for no reason. Yeah, that's almost like someone in a bank lent on the buy button by accident, and then someone said, you've been buying that for the last 3 days. Oh, really? There's absolutely no reason for that move, especially the end of it, that 300% ADR parabolic 2-hour move. Yeah, we did over a month's worth of range in 2 hours. Yeah, which is why all the monthly dash was screwed. Yeah, so this thing was 150 to 175 ADR within 2 hours when the market opened. It's like something went very, very wrong on that day. So we're just undoing that, correcting it, obviously, at the moment. So we're back to where we were again, and that's the bias. And it still kind of is. The pound is a little bit stronger than the euro, but right now you don't want to be selling it after this move. So waiting for some kind of pullback on that leg and then shorting it. So RSI extensions to the upside are probably going to work better. ADR hits to the upside will work better than longs, probably. But it could go either way. This is what I would kind of expect the market to continue to do with these two. Close trade partners, there is absolutely no reason or advantage for either party to be massively stronger or weaker currency-wise than any other. It doesn't make sense with trade partners. Yeah, so you keep your currencies as close as you can. So there's no real reason for that one to be taken off in either direction. Euro New Zealand got first long on that one on yesterday, I think. Yeah, yesterday. So first trade taken yesterday. Yes, just looking for an unwinding of that leg in the same way I was looking for the unwinding of that move there. So just looking for a push up, basically. There's lots of targets to the upside on this, as you can see. However, we've got the last non-change in interest rates from the New Zealand dollar on the 10th of July. So there's potential for that to push down into there, which is 225 ADR. So might need to get a couple more positions on, in which case then we'll be looking for a pullback on that leg, which will be into this area here. So yeah, first long taken. If I can get out nice and quick and easy, brilliant. If I have to scale in, it'll be that. But that was nicely extended last week, as you can see, and it's pulled back, but the pullback wasn't quite far enough. This one, when I got into it, I was watching this yesterday when we got to this propulsion gap, and I think it was about $380, $400 in profit on it, and I was like, shall I shut it? And I was like, nah, we'll see if they can test that level. So should have shut it. We double topped it today as well, so we'll see where that one goes, but had an opportunity to get out yesterday. Euro US shorts at the moment, again just looking for this US dollar rally to be pulled back on. Obviously there's Powell's move, and like I said, yeah, with all these US dollar pairs at the moment, they are holding up this propulsion move. So this is Powell basically saying, we're dropping the rates, you need to start selling the dollar. However, we know you've been selling the dollar for the last few weeks, so up to you. He didn't say that, but that's kind of what the banks are going to do anyway. So it's a case of, are we going to undo the propulsion move or not? If we undo the propulsion move, great. If we don't, we're going to start another leg up. So you need to be looking where we're headed. The problem with most of these is there's not really an awful lot of room until you get into all-time high scenarios again. So parity on this is way down low, which we've been at in the last year. There's parity there. And we kind of pulled back 50% on that drop that we had from when the interest rates started to go up. So we're now looking for, where are we going to take it? So that high, I think, has got a very strong chance of a reaction at the moment, because we're kind of just forming an uneven range on this at the moment. So these are your range lows down here. These are your range highs potentially up here. And as both are dropping interest rates, it should push and pull against itself. It's whether or not we get any type of conflict that drags Europe or the US into something that costs a load of money, in which case it's going to change. So we'll have to wait and see on this one. But right now, we're approaching a very, very good level up there, which is 175 ADR from where we are at the moment. So I've got another short going on up there, which will obviously bring the average up. The average is well within ADR. It's just I've only got a few positions on it. It's just not gone anywhere this week. So that's your euro, US dollar, pound pairs. Just come and have a quick look at the indices. Dead. Look at it. Absolutely dead. So 20 minutes, symmetrical triangle, inside bars. Just a mess on the Dow. Absolute mess. So broken along the NASDAQ now. So Nas, you want to be looking at that high, which is an old weekly level. So that's your 2 week ago high, which is here. So good price point for reactions. So that propulsion move, which is the break of kind of where we went on Friday in Globex. I'm going to give it a bit more room. I'm not going to. There's a good possibility that that will be the high of the day. But if it's not, it's a long way to the previous day's high. So be careful. Can't get anywhere. Look, Dow's stuck. So it's just shot today, isn't it? Shocking. Blue trader. My trading plan give long in the morning. I didn't get in because I want to be short. So I'm looking at the wordleful performance. I don't understand a word of that. Pot DJ, hit the like button. I do understand that. So yeah, don't know where we're going. Where are we? Pound. So pound odd. We'll come back to the indices before the end. We're just pushing up into previous highs. So we've got this big wide range. So we had this range formed here, that low. We broke it, propulsion, tested. So there's your range high, there's your range low. We had a price discovery last week. All the wick-off traders are going, long, long, long. Yeah. Hey, it's an accumulation. Everybody, long it again. Oh. That's why nothing works. Wick-off told you to long it there. Anyway, but depending on whether or not you looked at that, that would have been a spring short, wouldn't it? But anyway, so yeah, we are range bound at the moment. If this high goes today, and it's more likely to go tomorrow when the Australian numbers come out, we're going to be pushing back up into these highs here, which is that propulsion move. So that's your upside target. If that fails, if we break out today and sit up there and then we get positive movement on the Australian off of their CPI numbers in the morning, we're going to be back down here by the end of the week. So it's all about the news, and tomorrow morning is when you're going to find out. So we'll see what happens with that one, but at the moment we're sitting up at those highs. See where we go. Pound CAD, nice double top bounce last week. At the moment we've got the reversal alert and we're retesting, so that's good for shorts. Again, should be good for shorts really, but Bailey being a little bit bullish last week on Friday at Jackson Hole didn't really do anything. So that's the Powell and Bailey speeches there, those two candles didn't really do an awful lot. We are sitting up at those highs, so we're either going to continue this bullish run, going to accumulation, but there's no news really to drive it really too much this week. It's 3:15. I've completely talked through consumer confidence numbers, and obviously because it didn't do anything. So 103, we haven't done anything. So no movement. I wasn't expecting there to be a lot anyway. Nice symmetrical triangle contraction going on at the moment. So accumulating, ready for something. So yeah, that could go either way. But as you can see, I've not had a signal short on this. Last one was there. So you didn't even really get that. That was the last trade there, you can see. And I got out really sheepishly because of the speed of that drop. But it continued to rally. You know, this is the thing at the moment. All the technical traders are getting screwed because the thing's all over the place. Yeah, we're getting these huge parabolic moves. Probably breakout traders at the moment, probably not doing too bad. All the trend traders, they're struggling at the moment. We're getting parabolic moves, which you can't really get onto very easy as a trend trader. And all the supply and demand traders are getting reactions and not going anywhere. So there's no strategies out there at the moment really that are working very well, because I mean, if you're a breakout trader, you're probably doing the best at the moment because the parabolic moves. When you get into your breakouts, if you're a breakout retest trader, you won't get in. But if you just take breakouts, they're flying. But then again, we're getting stuck like this where all the breakout traders are getting absolutely creamed. So it's very hard for anything at the moment. If you're using fundamentals at the moment, you've got a bearish pound. Not happening, is it? So, you know, nothing. This is what I mean when I say the market is very confused at the moment. The old fundamental directional biases are sort of playing out, but not very easily and not very well. Technical stuff, very, very hard. It literally is a case of, at the moment, you could do as well flipping a coin. And I think some people probably are. But yeah, very, very tricky. Market structure at the moment is holding up, obviously, but it's just so erratic because it's all reacting on news. And the reactions on news, as we've seen from things like the New Zealand dollar, are not what they should be. So, you know, you can't really rely on the news telling you which way anything's going to go at the moment. But good old support resistance levels holding up. So that is a lovely looking short opportunity at the moment. Don't get greedy on it, really. 1.5 R, 2 R, that's really all you're going to get. So good looking short, but you would have been short on this from somewhere probably around here, and you're sitting in it for a week or so. 125 euro Swiss franc's going mad. Good move on the Swissy. Lovely big strong Swiss franc move coming in. Going back into neutral. So yeah, we were here on, was it yesterday or Friday? Market's getting scared. This Libya thing's probably scared the market a little bit. Yeah. So the more we go that way, the more that Swissy powers up. And yen. So yeah, again, market's jittery, very jittery. US dollar Swiss coming down. Again, that's beautiful support bounce potentially happening there on the US dollar Swiss. Look, great buy, super tight stop. If you get a bottom bounce and it goes up to there, I mean, those are the trades that make you the money, aren't they? But long in the US dollar at the moment, not the greatest proposition on the planet. Pound Swiss, again, really, really sideways at the moment. Last short was up there. That was the only short I took from that resistance level. That took 2 days to play out, and didn't want to really get greedy on it. I'm glad I didn't, because we're stuck. So no real decent movement, as you can see. It's just sideways. Very difficult to get into any trades on. Pound New Zealand, same thing with the New Zealand dollar interest rates, completely undone. Back to where we started. 2-day rally, completely undone. Sideways for 2 days. There's just nothing you can do with it. It's just dead in the water at the minute. And pound US dollar, so shorts on this one at the moment. Looking to start getting aggressive drawdown control positions on this. So we have taken out last week's high today. We didn't get a reversal alert on the hourly. So that is the first reversal alert we're going to get. So we tested the high. Immediately the sellers sold that high. I think that was probably more of a knee-jerk reaction, because obviously this was the Powell speech and Bailey, and we pushed up, we pulled back. So this is just the market going closed on Friday. Market was shut here yesterday. There you go. That's what happens when the market's shut. The algorithms take over. Up, sell the highs, buy the lows, sell the highs, buy the lows. Banks just make lots and lots of money. Every trader on the planet overtrades and gets killed. Today, we've pushed up and looks like limit orders triggering, trying to sell the last week's high. That will either work or it won't. So that is a good looking short potentially there. On the lower time frame, you've had a reversal alert, and this is the retest. Yeah, so nice price action there. So if this propulsion gap goes, obviously sellers are stepping in at the weekly high again to potentially sell that off. But we're waiting for the US dollar. We don't know whether that US dollar is going bull or bear off the back of the propulsion move. So I shall have to start to scale out some of this if it continues. New Zealand dollar CAD, got out of that one on Friday. First entry, second entry, exit. Don't know where that's going. Either it's just sideways. We have been sideways for a week or so. Sideways. Afternoon, David. Afternoon, Ismet. Afternoon, Agosa. Whoever else I haven't said hello to. Did I touch on pound US dollar? Just did it. So yeah, pound US dollar basically. We are, if you look at it on the 4 hour, it's 4 weeks now. 3 weeks. So we had that accumulation week, basically. We've had two, not just bull weeks, big bull weeks put in. Yeah, like that. So we're looking for the pullback here. This US dollar, though, is difficult. Yeah. So it's we know that they've been piling out of the US for the last couple of weeks, and I think it's in anticipation of obviously what Powell said in Jackson Hole, which is why we didn't get a bigger reaction on Friday. I would have expected if him saying it's now time to start cutting rates, and then two other Fed members coming out and saying yes, not by quarter, by a half. Yeah, it's happening. I would have expected a much bigger ADR day than we got. And what we got was a retracement of sort of 30% of Powell's move, and then an inside bar movement off the back of it. So the market, I think, kind of anticipated this. So this week is important, as in, are we going to get a reversal alert and break structure and then start to sell off some of this move ahead of the 15th of September, 18th of September, when the changing the rates is coming? Or are we just going to hold it? And if we hold it, there's the danger of that. It's either going to flag or accumulate for a few weeks, a la this sort of movement. Yeah. So we just need to see what they make of it and what they need to do. Yeah. Don't forget, banks and institutions drive this market based on not what should happen, but what they need to happen. If they are same as us, if we shorted here, yeah, and it pushed down, pulled back and continued shorting, yeah, we're not getting out. Why would we get out? If our P&L is going up every day, we stay, basically. When our P&L starts to go, we get out, and it causes the profit take move to happen. So, you know, if all the banks have been shorting the US dollar and there's still people wanting to buy the US dollar, they will still keep shorting the US dollar. They're not going to stop doing it as long as they can make money. Whether the US dollar goes too far, that's when you'll get Powell and people talking it up or down to make the banks do something. Yeah. At the end of the day, this is for money making. So if they can, they will. Yeah. So this is why you can't just hold on forever to things and hope. You have to start getting out of stuff if it's going wrong, especially if the fundamentals change. I used remember where we are in New Zealand. I used this as an example earlier on in the stream. I longed it here, somewhere around here. Yeah. I got out somewhere down here, or it might have even been lower down, after missing a profitable exit with about a 9% or so loss, just before obviously it did what I was anticipating it would do. Your job is not to get the direction right. Your job is to survive the move. But moves, you get to a point where you just go, no, can't hold it. There's no point holding forever. If it's, these moves like this are rare. They're becoming more common. this year specifically, because we've got all this uncertainty with interest rates. Yeah, we've come through a phase of not changing interest rates for 12 months. Yeah, so the market knows exactly what to do. Yeah, not going long, not going short. We'll just keep making money. Now we get to a point where the market goes, oh, he's going to do that? No, he's not. Oh, he's going to do that? No, he's not. So they panic, they sell. They panic, they sell. It's just much wider movement. If you stick an ADR on here, you can see exactly what the market, not that one, you can see exactly what the market is doing. Yeah. No changes in interest rates. Rumor about interest rate changes. Look at the ADR going up, the average true range. We've been sitting for the last 6 to 12 months in the lowest average true range we've had in Forex for 10, 20 years. Yeah, we just sat here going, holy crap, what do we do next? That's not me, the banks. We don't know what to do. So they're in the luxurious position of saying, well, we don't have to do anything. We just keep moving up and down and making money. Doesn't matter where it goes. But now they're trying to anticipate what's going on. The problem is the banks change their minds every 5 minutes. So the central banks, that is, not the, obviously, institutional banks. So, you know, with all of these pairs at the moment, you know, especially now, if things are getting too hot, you jump ship faster, because things have got potential to go into a squeeze. That Aussie New Zealand, the reason I got in that at the very worst point was because it looked like a beautiful pullback. It was really extended. And as I got in, the Australians dropped their interest rates. The New Zealanders froze theirs. It collapsed. All because of fundamental shift. The markets just went, we've got to sell the Aussie now. So, you know, you have to identify, you know, after 3 or 4 weeks, if they haven't pulled back, probably not going to. So just be careful with things like this, pound US. You know, make a line in the sand where you shut half your trades and you go, that was wrong. Yeah. Yeah. Even, you know, when you're position trading, this is still wrong. Yeah. It's not everything right. New Zealand CAD, very, very whippy, very uppy, downy all over the place, as you can see. Again, news driving the market. That's your Powell move. Pushed down nicely and out of that one. Yesterday, sorry, it's yesterday I got out of that one. As we pushed back down and undid that propulsion move. So out of that one, wait for a new signal on it. Again, with this one now, very difficult to pick a bias. Everything's dropping interest rates, so could go either way, really. Lovely big propulsion move to the downside off the back of that leg. Highly likely we'll come down and test that at some point. Quite when, we'll have to wait and see. So we're either heading up to this area here, or we're going to come and test this propulsion. Got a nice little gap for a leg like that as well. But right now, very difficult to say where that's going. All going to be based on what the US is up to, obviously. So it doesn't really matter which way you take it. Just factor in, I'm going to be wrong for 2 or 3 ADR, and, you know, prepare to be wrong for 2 to 3 ADR if it decides to go on a squeeze. If they're undecided, you're just going to get movement up and down, which is absolutely fine. As long as it's doing that, you cannot fail to make money. So signals at the moment, we're just waiting for them to make a big move, ready for them to profit take it. New Zealand, Swiss I've covered. New Zealand, US, very much the same. Got shorts on this one at the moment. Again, we're waiting to see what they do with the New Zealand, with the US. The New Zealand dollar, obviously, the interest rate change is very difficult to read whether or not the market liked it or didn't like the interest rate change. It wasn't expecting it. So we got the usual reaction where they reduced their exposure in the New Zealand dollar, but then they seem to have undone it all. So again, like previous New Zealand moves, it could go either way, couldn't it? So New Zealand dollar, US dollar, got shorts on that one at the moment. Big, 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 strong move, accumulate, push, Powell. So again, that's the type of movement we're seeing at the moment. Lots of parabolic stuff, but it will undo it. At some point, they will profit take it. So look for the propulsion gap targets and go for the ones that you're comfortable with. If you're really uncomfortable, if you're overexposed, get out faster. But look for where it's headed. We haven't broken. We've hit that high. I would say that's a test on Friday. Although it obviously exceeded the level, it came back down very, very, very quickly. We're pushing back up again. So if they retest this high and limit orders trigger, we're probably going to undo that move, I suspect. But we've had nothing but positive reinforcement out of Fed members since Powell said that announcement. So they've all kind of come out and said the same thing. Now's the time to drop the interest rates. How much by, we're not quite sure. We're watching the labor market. If those unemployment rates go up, we're going to definitely drop it faster. If the unemployment rates come down, we won't have to go quite as hard. So you're going to need to watch those unemployment figures coming out. Yeah, unemployment claims. If those numbers, which are forecast to be exactly the same week on week, if they come out and the unemployment claims have suddenly jumped dramatically, they're going to be more pressure on dropping interest rates by 0.5% instead of 1/4, which is going to weaken it further. If they bounce, if they come down, it's going to give the US a little bit more of a push. So we'll have to wait and see. But that's, news-wise this week on the US, we're very, very light on the ground. So we'll see what they do. And US dollar CAD, obviously, that one's dropping at the moment. Parabolic again. Powell just confirming that. So looking for push down into propulsion. Again, 225 ADR. So potentially another down week on the cards. But we'll have to wait and see what the market makes off the back of that Powell move. But yeah, squeezy on the US at the moment. Right, let's have a look at the indices. My God. Right, so we've run into the high of the day on the NASDAQ. So I'm just going to watch price action at this level. See if we can break through. We've got another 2.5, 3 minutes left on this candle. If this does break that low from Friday, which is where we broke down on Powell, is potentially where we'll find some resistance, which is 5R to the upside. So this area here is a fairly decent target upside. Other than that, you can pick that area there, which is within ADR as well. Yesterday's high is miles away. Sorry, that's Monday, isn't it? Yeah, so Monday's Globex low before the breakdown. That's not Powell, is it? That's just the open yesterday. That's Powell. Powell's a crazy move. Okay, we're through the highs. So let's see how convincingly they break these highs. If this candle closes bearish, I would say that's limit orders triggering at the Globex high. If they're broken it, looking for upside targets, which it looks very convincing like a break at the moment. S&P doing the same. So S&P target. Yeah, I mean, yesterday's high on the S&P is in range within ADR today. So again, we're coming up into that propulsion move from yesterday, which is the open, which is what we've retested in Globex today. So they resold that Globex high. So again, watch that level, which is coming up here. It's just dead. What a mess. What a mess. Just untradeable mess today. Let's see where it goes. I've got 40 people. So I've got to go out in a little bit. So I kind of don't want to because I want to manage these positions, but I'm going to let the EA take over, I think. Got 15 minutes, 15 seconds rather. I'm closing out the longs on the NASDAQ. I'm getting ready to close this Dow out. There's no point in risking a hedge on the Dow today. It's not got any legs. closing the Dow. So flat on the Dow. It's just not going anywhere today, so leave that one. We've got rejection at yesterday's, at the pre-market high. So there's your limit orders triggering at the highs. So watching this candle now basically for a break of that low to get into an aggressive short exit. And obviously, if it breaks again that high, I'll look at re-hedging it up here. But hopefully we'll just get inside bars up here now and just prove that we've got sellers on side. And then look for a pullback exit. DAX is an absolute mess as well. Look at it. It's just no direction. This market is just wandering around aimlessly today. Not a lot to do with it. I would suspect that the S&P is probably going to do the same if the Dow drops. So if you are hedged on the S&P as well, or you're looking to get into a short, watch your break of that rejection candle there. What's the P&L on the SIH this month? I don't know. Haven't looked. It's up, but not massive. I haven't traded much this month because I've been on holiday. So been a couple of good breaks though, but I've not been really taking many because I've been off, and we had gone flat until Friday. But always wary when we're getting close to all-time highs as well on these indices, because you tend to get a few days at all-time highs where you usually break them, and then the market sort of is in shock a little bit about it. We're not far away. So short going in on the NAS. So we've got a lower high. We're putting in a lower low. So that is also resistance. Not triggered the short yet. Again, sitting sideways. I'm going to let the S&P play out. So out of that one, if this one works out, hopefully, so the loss recovery target on this is 306. That's a £200 hedge. So if that one plays out, it pays for that, puts 100 in the bank. And I've got 100 and something profit, 170 profit from the FTSE this morning, and roughly 100 down on those two combined. So if that NASDAQ works out, the short exit on that one, and the S&P doesn't hit target, then it's break-even day basically. But I think I'm going to remove this. I've said it a few times, and every time I get a day like this where you just get choppy opens, they're always hedging together, these two. So I'm becoming more and more convinced there's just no point in running all three. The edge is nice when you get two break, especially when these two break clean. Doesn't matter what happens to the Dow. If the Dow becomes extra pocket money. But when you get hedged on these, and when it's a bit choppy, it's too much loss. Well, not too much hedge. And what I'm finding at the moment as well is it's very hard to get 5-hour targets. Yeah, 3 hours. We had a couple of days last week where we got 5 hours on multiple instruments, but 3 hours really a limit at the moment. We're lucky to make that. So we got not so much an inside bar, almost an inside bar. So indecision on the Nasdaq. Bulls taking control again though in the last 5 minutes. So if this level breaks, obviously I'm just going to drag my trailing orders up underneath these candles until they get triggered, and then I'll look at rehedging if necessary, but hopefully that level is what we're looking for today. Right, so let's quick look at what US dollar Swiss is up to. So the US dollar Swiss, we're down at those lows, not made a massive amount of progress beyond that low. This is a good indicator of how strong that US dollar is going to be today, because obviously the Swiss we know is fairly strong. So if this holds, we know we've got some money coming into the US. What I'm concerned about is obviously the US rally from Friday continuing today, because yesterday we had nothing. So it'd be nice if this can hold this low, because it shows us that the US dollar's got some strength. We're approaching ADR on this. Potentially good looking pullback. All these USs are good looking pullbacks obviously at the moment. But yes, I either trade the US 500 or the Nasdaq. They're the both. It's like trading currency pair. Yeah. Correlation has been very hit and miss. It's getting much more correlated again. I think the correlation with those two tends to go a lot more in line with earnings. So when you get the earnings fortnight, they go out of sequence a little bit more. And when the market is volatile, it goes out of sequence a bit more. But there's just too much correlation. I knew that from my testing anyway. But the reason I've run all three for a while is to get the edge there. So when you get all three break, the profit. So when you get the stock market, it's people say the stock market went crazy today. When the stock market goes crazy, you make 3 times the profit. When the stock market doesn't go crazy, that's when it becomes a little bit like a house of cards. The stock market is less crazy than it is crazy. So there are points where I've had months with SAH and with ORB originally where you just can't put a foot wrong. Every single index at the open just goes, and you're like, this is too easy. Then you get points where it just goes dead. When you look at earnings fortnight, you would expect earnings fortnight to be massively volatile. It's not anymore. It's quieter because the earnings basically, we're in a very fair market at the moment, and we have been for a long time, and the markets just don't want to put too much risk into stocks at the moment, because stocks and companies will change based on earnings from individuals, and at the moment everybody's poor everywhere, which means you buy less, and whether you've got more money or haven't got more money at the moment, very much based on interest rates and inflation, which is at the moment unprecedented, isn't it? We haven't had situations like we're in at the moment. So stocks are a lot more hit and miss, I think, unless you're trading the big names, which don't seem to change. That's why a lot of people trade Nvidia, Tesla, Amazon. They're trading the big high liquid stocks because they're always going to be moving. There's always going to be interest. When you're putting money into tech, it's going into Nvidia. Yeah, it's going into Tesla. Yeah, when you're putting money out of tech, it's coming out of Nvidia and Tesla as well. It's all done in sectors, isn't it? All the pension funds, the hedge funds, they're buying stock sectors. You buy tech, you buy medical, you buy manufacturing, transport, you buy whatever, aerospace. So it's very much a sector-based system that they use. We are just breaking down again on this. See if this is Swissy. Yes, loads of Swiss franc strength coming through today. Bit of Aussie strength as well. Euro also weakening. no other news. Okay, so where we've stalled out at the highs there, we put another bull candling, higher high, higher low, but we still haven't broken. So we are running out of buyers here. So just going to trail, obviously the EA will just trail that until it gets triggered. And then either that trade works out or I'll re-hedge above the high of wherever we're getting triggered. But stuck. It's stuck. Just coming room, so may have covered Nvidia earnings announcement tomorrow. Yeah. Yeah, I mean, earnings is, like I say, earnings is so hit and miss at the moment. Individual stocks obviously move. Obviously, there's a weighting system, so individual stocks like Nvidia will move Nasdaq and things faster than most others. But I'm not sure you get those massive injections into companies on good earnings now. I think it just doesn't seem to be working that way at the moment, like it used to. We used to. I remember when I was trading stocks, we used to the whole quarter was focused around earnings fortnight. It was all about earnings fortnight, and in between earnings fortnight and the next earnings fortnight, we were literally just looking for gap plays on small stocks, and we were trading Nvidia, Tesla, and the big names. I don't think it works that way now. It's less. We've watched since I've been trading ORB and SIH in here. We've watched the earnings fortnights, and there is just no bang at the open. There's so much more, I think, now put into Globex. Yeah, there's so much more stock action happening before the open. We've become more and more and more and more automated. There we go. There's a trigger on the short. We've become more automated, and I think there's a hell of a lot more going in before the opening bell. I think it's probably going to get to the point where the opening bell is just irrelevant, isn't it? In which case, this strategy just dies on its ass. But not at the moment. How do you technically execute re-hedging? So I will basically just place orders. So at the moment there's 2.38 short. So I just go long by the same lot size. So literally so that's 0.8, so it's 1.6 basically long. So I will go long if we break that high, I'll go long 1.6, which re-hedges. So all you're doing is so at the moment the loss is locked in at that. I'm now short there and I'll go long there. So it locks in the same loss again, basically. So that's why re-hedging isn't ideal, because obviously that is locked in. Not now, because obviously that's why the P&L is now fluctuating. But if that now pushes up again and I hedge here with the same amount of lots I've got on short, that loss is locked in, and then I've locked that loss in. So now I've just locked in two losses. But that's no different to using a stop loss and getting stopped out twice. Exactly the same thing. If you go long here and then the market pushes down, you get stopped out. All I'm doing is I'm locking the loss in and giving myself time to analyze the market, let the market play out, and then decide, right, that didn't work, the opening range break today. Where are we headed? I think we're headed there. So I'll take the longs off and I'll get into another short up there, which brings the average up. And if I'm right this time, excellent. But it's no different to me going, I'm going to go long there, getting stopped out, and then going, oh, market's broken long, right, I'm going to short it when we get here. And I'm going to have a stop loss there. Hedging is the same. The advantage of the hedging strategy is if the first trade works out, you're done for the day. If this one works out, I'm done for the day. There you go. So there's a hedge gone in there. I've actually got a new version of this that I've reprogrammed to auto hedge. It's not quite right. So but that's how you would place the manual one. So you see that is now going to lock in that much loss. So it's going to lock in a 42-point loss. Opening range was 42 points. So basically just doubles your loss. No, it doesn't double your loss, it doubles your locked-in hedge loss. But to do it manually, you would just press the button. I've just done this lazily because sometimes I have to go out, like I have today. So I have this set up so that if I can't be here, it does that automatically for me. But it doesn't work properly all the time. So I haven't released it because it's literally just a fail-safe backup mechanism. I would never recommend auto trading, fully trying to auto trade stock indices. You need to be able to read price action. These things are not something you can automate. There we go. Just retesting those highs. Big buy order just came in again there. Likely to get run over today. Broker. I signed up with a broker last week because I wanted to test a fixed stop loss broker. And you know, it's like when you sign up with any broker, you have to give them all your details. And literally every day, without fail, they phone. It's like, it's because of the tech companies. They now take up a lot of the US 500 movement. Yeah. Also, the companies that feed the tech companies take up a lot of the US 500 as well. So a lot of the S&P 500 that aren't finance based are partly manufacturing or supplying tech. So and they also supply pharma as well. So there's a lot of the stock market is interlinked, which is why you get a lot of confluence a lot of the time on all the stock markets. So if, for example, there's like 3 tech stocks which have had good earnings or have got good something happening, into those will feed another 20 or 30 stocks which will be in the S&P who supply those companies. So that will drive the stock price of the S&P 500 up, feeding the Russell 2000 who feed the S&P companies that feed the NASDAQ. And it's like a pyramid of companies that all feed into these big ones. So that's why you get confluence of movement when you see the stock market. That's why people say the stock market went nuts. It went skyward. It's to do with partly the confluence of stocks all feeding into each other, but it's also linked to the US dollar. If the US dollar collapses, what happens to the stock market? It pops. If it drops, it usually is because the US dollar is popping, because all stocks are priced in US dollar. So therefore, if there's a massive drop in the US dollar, you tend to get a pop in the stock market, because if you've got to pull money out of the US dollar, you need to put it somewhere else. So you diversify into stocks. Stocks are priced in US dollar. So by diversifying into that, you affect the US dollar. And it's all a big interlinked thing, which is why it's completely random and almost impossible to predict, which is why I keep saying in here pretty much every day, the only thing you have is risk. There is no technical indicator on the planet or anybody on the planet that can tell you where this thing is going. It's either coming up to test the next level that they sold from, or it's going to go from this level that they sold from. It moves from support and resistance to support and resistance because there are distances it can travel, average daily range each day, before it gets exhausted. And there are levels where you will find participants driving price. And if they are still short on this instrument or these instruments at that point, they will want to sell more. Most of the participants in this are pension funds and hedge funds. Yeah, and they don't care where price goes because they're hedged. So it's a random object. All these people selling you these courses that teach you how to trade, if they're not teaching you the importance of risk reward, don't know what they're teaching you, because that's all you got. Yeah. Price action. Look at that massive wick. Sellers are in control at a level of resistance. What happened next? The buyers took control. Then the buyers took control again. What happened next? The sellers took control. What happened next? The buyers took control. What's going to happen next? I don't know. I can tell you, neither does anybody else on this planet. It's either going to be buyers in control or sellers in control. If you get sellers in control for 3 5-minute candles in a trot, we're going to win. If the buyers don't, if the buyers take control, I'm going to lose. Yeah, there's nothing else going on. There's literally buyers here and sellers here. They've got 100 million, which they're shorting with. They have got, hopefully, 95 million that they're longing with. So what's going to happen? They are going to eat those 95, and then they're going to make price move down to find the next batch of orders that's looking to buy it. Price action. Yeah. These numbers are entered by banks and institutions, pension funds, hedge funds, and algorithms to execute orders. They couldn't give a monkey's which way price goes. It's irrelevant. We're the only ones that care about where price goes. No one else. So we try to find patterns that repeat themselves by following what the big banks are doing, which is why you find virtually all traders that are successful in stock indices and stocks use nothing but support and resistance levels or volume profile, because all those are telling you is where the banks and institutions have traded from in the past. Yeah. And if they traded from there in the past, there is a possibility that they will trade from there again. That is all we have as traders. Where have they been? Because we can't tell the future, and they don't care whether the future goes up or down. So if they don't care whether it goes up or down and we can't tell where it is, the only thing we have is their footprint. And that's it. Risk and reward. I don't know where this is going. I'm hoping that the limit orders that triggered earlier on today are going to hold the market in place. But that is nothing, again, this level here, because that happened there today, means we know that the sellers took control from roughly that point in time. We've got there off the back of a massive bull run, and we know that the sellers are sitting at this level trying to sell again. We know that because for the last 20 minutes while I've been sitting here, it hasn't gone up. So we know there's a lot of sellers here. But what we don't know is the volume of orders long and the volume of orders short at this point in time, because it's not what it was at that point in time. That point in time has happened. So that's all we have as traders, isn't it? Which is why everybody tries to sell you courses on footprint charts. And what are footprint charts? Or volume profile charts? Support and resistance levels. I don't need to see a thing on the side of my chart that looks like that. I can see the levels on my chart very clearly. It's all the same thing. People say you can't trade CFDs on indices and stocks. Why not? It's exactly the same as futures. You go and look at a futures chart right now. That thing is ticking exactly the same. You can. Or you haven't got volume profile. I don't need volume profile. Telling me the same thing as I can see on my chart. What I can see on my chart is guaranteed orders. What you can see on your volume profile is what has been placed in the past. And then everyone says, yeah, but I can see the ladder. I can see where the orders are. 95% of those are fake. That doesn't help you at all either, does it? Nothing helps you. There we go. So re-hedging long. So locked in 2 losses. Nothing I can do with this today. It's dead. Markets open was too messy. It's rallying long, so I will attempt to get out and repeat the process just shy of ADR when we get there, assuming I do get hedged. That's not going anywhere. Can't do anything with it today. And S&P has managed to get just about 3R. We're just coming up to 4R on the NASDAQ. So if you took long breaks, well done. Other than that, who knows? Right. I'll be back tomorrow. No, I won't be back. So I'm not here tomorrow. There you go. Re-hedge long. So I've locked in 720. yeah, I'm not here tomorrow. I'm out and about tomorrow, so no streams tomorrow. I'm back on Thursday afternoon again. Yeah, so it's an afternoon session again on Thursday when my website decides to load. So yeah, so not here tomorrow. Back on Thursday, 2:15. We'll trade the New York Open again. We'll have a look at what's happening with FX, with price movement on this US dollar. But tomorrow morning, obviously be aware of the CPI for the Australian dollar. That's going to be your main market mover tomorrow. Waller's speaking late in the day. Other than that, no news tomorrow. We've got CPI numbers coming in from the German states in the morning at some point. Usually tends to be around about 10:30. We get the final state declare. So that gives us an idea what's going to happen with the euro potentially. And then we've got GDP and unemployment pre-market on Thursday. So all of this lot will have happened by the time I come back on Thursday afternoon. So potential movers on the US there. But I think this market, if the US is going to drop, it will just happen anyway. I don't think they're going to wait for a news event to do it. So we'll see what happens with the US. But at the moment, still not really going anywhere. So we'll have to just wait and see. All right, so have a good day. I'll be back on Thursday afternoon. If you need anything, I'll be in Telegram or Discord. Other than that, have a good one, and I will see you next time.